Well, boys, we got to take the bad news with the good news. And unfortunately, that means playing every video, whether it's a bearish or a bullish viewpoint. So, we're going to hear from Grizzle and get their perspective and take on MindMed. Before I press play, though, and we watch this together, I just want to point out the person that they are bashing in the beginning is Bruce Linton from Canopy Growth. I disagree with what they're saying because as a shareholder since 2015, he's done a phenomenal job guiding that company. And the only reason that he was fired from that position was because the parent organization, Constellation Brands, and Bruce Linton had two different ideas on how they wanted to run the company and the future of that company. So they parted ways. But I digress. Let's get into the video.
I got Scott Willis here with me, the professor. We're going to talk about MindMed. This thing has gone bonkers. I put out a tweet yesterday, which this is a classic sheep to slaughter in terms of backing the promoter that buried you in literally the last pump and dump cycle in cannabis.
Like 6 months ago, though.
6 months ago. 6 months ago, he was kicked out of his job.
It's still fresh.
And then you add a layer of a schmuck of all schmucks in Kevin O'Leary. This guy couldn't pick a winning trade if his life depended on it. And this guy's now, let's be clear here, he has no understanding of psychedelics, let alone cannabis, let alone anything related to anything. But this is classic. It has a pump and dumpy feel. Next week, we have a very good healthcare analyst in Terry Chong, a very good friend of mine. He's coming on the show, the psychedelic show, to talk about the specifics on MindMed, because I think those are very interesting. But I think Scott's going to give us some good overview right here on the structure of the company right now and whether it's set up to win.
Yeah, the capital structure is the most important piece of information in the first year that a stock is trading. So there's two things you want to look for. You want to look for a low share count. That means that any earnings that they make, you get a bigger ownership share of that. And you also want the cost basis of the shares to be as close to the stock price as possible, right? Because if insiders are sitting on huge gains, they are fine selling their shares, driving the price lower because they still are going to make a ton of money, right? So you want low share count, low cost basis. High cost basis. MindMed has neither of those, unfortunately. So if we look at the share count, there's 317 million shares outstanding.
That's insane.
That's a ridiculously high amount of shares.
So I was like always poking fun at Aurora, saying once you get to 1 billion shares outstanding, and you made no money. Like, what a joke! This thing's out of the gate at 300 million.
Yeah. So like real companies for the long term, they generally, you look at even like Lyft, Uber, they're like 1/10 of that. So like, it's kind of suspect. Why are there so many shares issued?
Yeah.
But then let's get into what the cost basis of the shares are. So those insider shares, before they did a raise, those are at 1/10 of a cent, right?
What?
And there's millions of those outstanding. So and then they recently did a raise at 33 cents, right? So that's kind of the baseline where you're starting. Stock's at 95 cents. The problem is if the stock fell from 95 cents to 1 cent, those insiders would still be sitting on 10 bags. That's all you need to know. It's ridiculous.
That's crazy. So we got 300 million shares outstanding. And as Scott put, well, you want to be getting into stocks that have a high cost basis. Give them a hurdle to get over. There's no hurdle.
Yeah. Out of the gate, these guys are sitting on massive gains, right? They don't even care if the stock goes up anymore. So it's a tough place to start. And then you have unlocks coming in September. Those usually lead to short-term pressure on the stock. So it's a tough place for them to start. It could be a legit company down the road, the suspect, but the capital structure is a tough place to start.
And this is where everybody can learn something. You don't necessarily need to know anything specifically about the psychedelics market per se.
Yeah, not even what the company does, really. This speaks to the first year of this company. This will tell you what might go down.
This is all you need to know. If it's set up to win, if the shares are, if there's a ton of shares out there.
Well, a couple of things. First of all, I'm not a big fan of Kevin O'Leary, as I've stated in my past videos, but he put up $6 million of his own money, and he wouldn't do that unless he researched the company himself. And as for his investment style, he is an index fund guru. He does not pick and play like Warren Buffett, so you can't compare the two. The share count, I'm agreeing with them surprisingly a little bit on this. A little over 300 million at 317 for outstanding shares is high. But again, and I hate to compare this to cannabis because they're two separate things. When I first invested in Canopy Growth, the share count was at 75 million. Now it's 350 million. So you have to take into consideration the fact that this is a biotech or a neurotech startup. It is not an Uber. It is not Lyft, and they are completely separate entities in different industries. So, like, let's just even just take a look at this comment here, which Finley Clark. Uber has 1/10 the shares of MindMed. Uber has 100 or 1.7 billion shares outstanding and a $55 billion US market cap. MindMed has 300 million shares and 100 million Canadian, not US, market cap. Lyft has slightly less shares outstanding, but at 100x the stock price. Might want to edit out that, yada, yada. Anyways, but there are things here said that I just can't wrap my head around. But what do you guys think? Do you feel like this is a pump and dump? Do you feel like there's a little bit of shade being thrown? Let me know.